Continue to be in focus. Persistent Systems posted a stellar set of Q2 earnings, with the company beating street estimates on revenue and margin front. Vinit Teredesai, who is the CFO at the company, joins us now to discuss more in terms of the outlook as well. Thank you so much for joining in. Well, you've guided for 100 basis points EBIT margin expansion in FY26 and FY27. How will you get there? What's the glide path here?
2 years back, when we basically started this, we had stated that as we get to the $2 billion journey by FY27, we want to improve our operating margins by 200 to 300 basis points. At that point of time, we were roughly in the 14 to 14.5% range. Today, if you look at FY25, we delivered a 14.5% operating margin. This first quarter, we delivered 15.5. This quarter, we delivered 16.3. So we are roughly at 15.9 for the first half. What we have said is that this 200 to 300 basis point, if we just sustain what we are doing at this point of time, there will be 100 basis point of improvement over FY25. And as we enter FY27, we would like to see if we can improve it by another 100 basis points. So that's the 200, 300 basis point trajectory that we have been talking about. And at this point of time, if you look at it, the levers are pretty much what we have mentioned are out. We have seen our utilization continue to remain we are running a very tight shop. At this point of time, looking at the labor market, both demand and supply situation, we don't believe that we need to go and do any aggressive hirings in the market. We are hiring to the requirements. We are hiring just in time. We are able to deploy these guys immediately on business. And that's how the things are working.
Well, that's very important. But, when you're looking at the revenue growth in Q2, very strong revenue growth of 4.4%, led by BFSI, which was up almost 7%. Healthcare and high-tech verticals too have done well. What led to that? Along with that, has the demand environment improved, or it's better execution by the company, or any other factor? And how sustainable is the 4% plus run rate? How is H2 looking like?
Last 2 years, our growth was driven very heavily through healthcare life sciences, and that now is going through a consolidation phase. While it has grown up sequentially in this particular quarter, we anticipate that it is not going to grow at the same pace as it has grown in the last 2 years. But the more important part, banking financial services vertical, which has been a very, very important vertical for us, whereby we have made a lot of investment into leadership, on sales, all of those new relationships and logos that we have signed, we are now able to see the fruits of it. We are seeing a good amount of traction that is happening. We have been able to open up new logos and scale up our existing logos in North American region. We are now able to take that into European region where there is a focus. So all these factors and some of these investments that have been made over a period of time are yielding results. Needless to say, there is at least sentimentally, there is an expectation that the interest rates will continue to go down in US for next couple of quarters. That is a positive trigger for us that will give a little bit of a credit uptake that will benefit the overall spending. But at the same time, let's be realistic. It's not that there's a sudden spend and sudden change in demand that is happening. The environment continues to remain challenging. You have to do your hard work, and we believe our focus at this point of time is to keep our heads down, focus on our relationship, stay close to the customers, sign up what you can commit and deliver, and ensure that the delivery is flawless.
All right. So do you think BFSI will anchor growth for you? It's around 35% of your revenues today. Can BFSI contribution inch up to around 40%?
Yeah, it can go even better than that. See, if you look at it, our BFSI practice is roughly a $500 million practice. If you look at the competition, many of the guys have actually BFSI practice equivalent to our overall revenue. So the total addressable market is quite large. And we believe that our focus on banking, financial services, wealth management, capital market companies within that, the sub-segment part of it is something very, very important for us, which we are now, whereby we have hired leaders. We have started doing our planning exercise in that fashion. Our targets are rolled out and looked out in that fashion. We are trying to look at this as a sub-segment that fuels the overall growth in the particular segment. So all of these things are positive for us, and that's what, should lead down the growth.
Okay. Well, that's right. So you're saying that it could be slightly better, especially the BFSI part of the business. Now, getting back to the earlier questions on growth, is H2 looking materially better than H1, or will it be tough given the fact that seasonally Q3 sees furloughs?
See, at this point of time, what I can say is we don't give forward-looking guidance. But what we have said is our 2 billion journey by FY27 continues. In the last 22 quarters, we have delivered a consecutive sequential growth. Our order pipeline is very, very strong. The couple of deals that are in pipeline at this point of time look very, very promising. If we are able to strike them and happen it, we believe that this should help us in terms of continuing to maintain the momentum. At this point, unless until obviously any unknown event happens, which is not in any of our control, but we'll tackle that uncertainty as it comes.
Let's understand on the H-1B visa issue. How many employees have you sent on H-1B? Will you bring this down with the increase that we've seen in visa fee?
See, if you look at this is again before even the proclamation or even the current administration come into play. We have been reducing our dependence on H-1B visas significantly over the last 60% of our hiring happens locally, mainly green card citizens, etc. That we look at it. Number two, we don't differentiate between an H-1B and a local player. We pay the same amount of wages that are being given to it. Last, we have a good amount of inventory of people who are visa ready at this point of time and can travel. Our applications on H-1B visa for this year from India are absolutely in the minuscule format. We are not actually making much applications because there is not much amount demand also coming up from the customers. So we don't believe at this point of time this H-1B application fee proclamation that has come in, that is going to have an impact on us for in the short to medium term. If tomorrow things change, we'll look at it. But at this point of time, we are well covered. We have a good amount of inventory of people available who can travel if the need arises. And also remember that the new fee is only applicable on new applications and new applications filed from India.
Right. So new applications filed from India is what will be impacted, especially as far as the new H-1B visa application hike is concerned. So what is the total number of new H-1B visa applications from India for you this year?
It's virtually in the low single digits. That's what the applications we have made this year.
Okay, would you also have a ballpark estimate of how much advanced AI contributes to revenue right now, the way HCL Tech did? Also possible to quantify the productivity benefit you're able to pass on to clients because of this? Okay, looks like we've lost that line, but thank you so much for joining in today. We'll try reconnecting, but for now, this is what the conversation looks like with Persistent Systems. The stock is higher by 6.5% as we speak, one of the big movers in trade today. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets, and we'll also get some technical trades coming in with our technical analyst.